Member of Ciel Limited, Kibo Capital Partners has launched its second Eastern and Southern African-focused private equity fund. Thierry Huguenot, who's the Chief Investment Officer at Ciel Capital, joins us now for more insights all the way from Mauritius. Thierry, good to have you with us. I understand you've previously spent time in the UK as well as Wales, where you focused on the private equity environment on the African continent. Has anything changed from your time spent in Wales back then and your objectives now with the new fund?
Yes, good morning, ma'am. Definitely, I would say that the world of private equity in the region where we invest, i.e. Southern and Eastern Africa, has actually changed quite a lot over the last 5 years. Of course, there's the current economic growth of the region, which is gathering momentum across the target markets. But clearly, there's actually now much more capital available because there's a number of funds that have been raised. And at the same time, the concept of private equity and the value addition that we can bring to the companies in which we invest is something which is much better understood now by the companies. So I would say that the overall landscape for private equity in Africa has improved and changed.
Thierry, we know that we have a vibrant private equity industry in South Africa. I presume elsewhere on the continent it's still embryonic.
Yes, you're right. It is embryonic. However, it has really been going on now for about 10 years. There were initially a few private equity country funds which were established for the other African markets about 5 to 10 years ago. And then a few years ago, we've seen the first generation of regional private equity funds. And now that subclass is now coming to age, and we are seeing now some further private equity funds being set up. However, you're right when you say that it's still embryonic, because as compared to the size of the actual opportunity, the size of the industry is still quite small. So from that perspective, it's embryonic, but certainly growing quite fast.
And of course, Africa's got 54 countries, so it's not that easy to understand every single country's rules and regulations and laws. Where do you focus?
Yes, you're right. I mean, Africa does consist of a very large number of countries, but each private equity fund would probably has its own sort of area of expertise and its own niche. For instance, our company, Kibo Fund, intends to focus on the SME market, i.e. the small and medium-sized companies operating in Eastern and Southern Africa. So really, we really do have in our markets about a dozen or so core markets. So it is still quite a lot, but it certainly is something which is quite doable, I would say, from the sort of organization that we are.
The capital that you're looking to raise, Thierry, where is it coming from?
Yes, so we've just done our first closing at $50 million, which was the size we intended to do. So typically for private equity funds investing in Africa these days, the development financial institutions are still quite important investors. So in our case, we've got funds from the IFC, African Development Bank, and the DEG, which is a German DFI. They tend to contribute to about between 40 and 50% of the capital. And alongside them, we would usually have commercial investors from Europe, the US, and increasingly from the region as well. In our case, we also do have some capital from a number of family offices in Mauritius and the region. So we tend to have a good mix of large international DFIs, commercial investors who invest in different parts of the world and not only Africa, and then sort of smaller sort of regional investors such as family offices or private investors.
This is Kibo 2. What kind of returns did you achieve with Kibo 1?
Say again, sir, I didn't catch
This is your second fund. Your first fund,
Correct.
Kibo 1. What kind of returns did you achieve?
Right, so the fund, typically these funds are 10-year life funds. So the fund was launched in 2008. So these funds are structured in a way that the first 5 years of their life are essentially the time to invest the capital, and then the second 5 years are essentially the time to realize the investments. So before the end of the life of the fund, it's actually quite difficult to know exactly what performance we're going to be able to achieve. But as things stand, i.e. based on the valuations of our current portfolio, and based on the one exit we've realized, we should be able to realize an IRR for our investors of between 15 and 20%, which is roughly in line with what we set out to do.
Well, thank you so much. That was Thierry Huguenot. He is the Chief Investment Officer at Ciel Capital.